These days, it's difficult to find good news. All it takes to see the most recent doomsday saying is to turn on the TV, browse social media, or skim through the morning newspaper. We're experiencing surging inflation, a conflict in Ukraine, changes in leadership, and eventually, a cost of living issue that is making many people feel helpless and fatigued as the world calculates the cost of the pandemic. The state of the economy is dangerously deteriorating. People are still stuck in their own ways, dependent on jobs and pension plans, as they believe it will keep them afloat. In the midst of all this, Robert Kiyosaki returns with another warning. The bond market is collapsing, says Kiyosaki, and this might have dire repercussions. I'm concerned about IRAs, pension plans, and all that, he says. We're far out of the woods, says Kiyosaki, even though authorities acted rapidly to ensure that the deposits at the failing banks remain safe. He even said in a tweet, "Crash and crisis just starting." In a recent interview with Fox Business, he declared the FED is the problem. They are what they say, the firemen and the arson. So how can investors safeguard themselves in this unstable environment? For long-time wealth, Kiyosaki invests in and keeps real estate assets, focusing on investments that generate cash flow while avoiding speculation and property flipping. When Robert Kiyosaki purchased his first property, a 4-apartment building in Hawaii at the age of 26, he discovered his passion for real estate. Then in 1977, he established Rich Global LLC, a conglomerate that deals in production, sales, and financial literacy. Over the course of his career, Kiyosaki has made significant real estate investments, and his portfolio includes both residential and commercial properties in Scottsdale, Arizona, Virginia, Georgia, Colorado, Nevada, and other places. Robert stated that when he started out with a little $45,000 investment in a $65,000 property, it earned him $40 each month. When the market improved, he sold the house for $95,000 and spent $300,000 to purchase a 12-unit apartment building. He sold the apartment building for an amazing $495,000 just 2 years later, and he used that money to buy a 30-unit complex that brought in $5,000 every month. The building was ultimately sold for an even more enticing $1.2 million. As an additional inflation hedge, Kiyosaki holds gold and silver investments and advises holding up to 10% of one's overall holdings in these metals. He advises individuals to invest in physical gold and silver rather than paper assets because he thinks that they are safe and hedge against inflation and uncertainty. He bought gold and silver bullion in 2018 in anticipation of a financial downturn after investing in the gold-backed coin Carat Coin in 2017. Kiyosaki expanded this coin collection in 2019 by adding platinum and palladium coins. And by 2020, he increased his physical gold and silver purchases to hedge against budget shortfalls and money creation. He also put his money into Bitcoin, Ethereum, and a few other cryptos. His cryptocurrency holdings include a few altcoins like Ethereum and Bitcoin, and according to Kiyosaki, Bitcoin will cost $12.5 million by 2031, meaning that a poor dad now might become a rich dad tomorrow. He suggests investors spread out their risk by holding 8 to 10 different coins in an index fund-style portfolio, and not to invest more than 5% of their assets in cryptocurrencies. To avoid paying taxes on the earnings, Kiyosaki buys Bitcoin and other crypto assets using loans. The cryptocurrency market has a financial year that's been really good thus far in 2023, and prices for Solana are gaining about 150%. Ethereum's rising 30% to $1,577, and Bitcoin is rising 37%, close to $22,900. Investors now feel optimistic that the crypto winter is now gone, and that the upcoming months may see even greater growth. The increased hope is heightened by the Biden administration's quest for stronger controls of the cryptocurrency world. Even though the market value of all digital assets has decreased from a peak of $2.2 trillion at the end of 2021 to about $835 billion in December 2022, cryptocurrencies have still outperformed conventional risk assets like US equities and US bonds in terms of risk-adjusted returns. The beginning of 2023 will see the end of the bear market, which will be followed by a bull market according to analysts. The most important cryptocurrency, Bitcoin, is anticipated to reclaim its position as the leader, and Ethereum might see more regulatory certainty. the percentage of long-term Bitcoin investors is still above 85%, showing that the investment thesis is still valid. The network activity of Ethereum has also increased, highlighting its position as a pioneer in the multi-chain industry. Web3 technologies and decentralized finance can also possibly be significant plays in the market, but investors and traders should exercise caution because these markets can still be erratic and volatile.